Hey, Kristen, good morning. That's right. Joining us now is Ryan Serhant. He is the founder, CEO, and broker of Serhant. Over his career, Ryan has closed more than $10 billion in sales. He also stars and produces Netflix's Owning Manhattan. And recently, Serhant secured a $45 million fundraise in its first funding round, primarily to enhance their AI platform, Simple, which streamlines workflows for real estate. Ryan, it's great to have you on the show this morning.
Thanks for having me.
So, we're anticipating new fresh housing data to come out at 10 a.m. Yep. Obviously, we're going to get more of a direction as to home builder confidence. Talk to me about what the current trends are in the market and what we can anticipate.
I think we're seeing the most optimism that I've seen in probably the last 6 years in terms of home building. Mm-hmm. I think the new administration coming in, they've made some promises. Let's see if they can keep them, right? The housing market is determined by three things: supply, demand, and interest rates. And so if we can create more supply, then we can bring down pricing. We can give more to the demand that's already out there because there's significant housing demand. And so I'm excited to see where we might be able to loosen up some federal or state housing, right, that could potentially exist. The most land that's owned in this country is owned by the government, right, both locally and nationally. Yeah. And I think there's a lot of national home builders that are excited about the prospect of different types of tax incentives to create more supply over the next 4, 8, 10 years.
What are the potential implications that this is going to have on home builder confidence or trends that are going to impact the broader market?
Well, everyone watches rates.
Yeah.
So even if the Fed benchmark rates comes down, I don't think mortgage rates for your average end loan home user are going to come down anywhere lower than, let's say, 6% over the next year. I think that's kind of the new normal. I think people understand where we are, and they just have to make a decision whether they're looking to buy, sell, or develop. But developers, there's capital that's out there for home builders, and they're constructing all over New York City in a way that we haven't seen in a long time, all over Florida, like we were just talking about.
Yeah.
I get on a plane and go down to Miami to, we're selling Mercedes-Benz places. Miami right now in Brickell is one of the fastest selling projects I've ever been involved in, and that's an active, massive construction site. I think it's the largest single residential construction site in the history of the state of Florida.
Wow.
And it's an incredible thing to watch in the states that incentivize developers to build. There's plenty of states that don't. And so it's just a matter of what markets are going to kind of be the hottest in 2025 and making sure that those builders are incentivized to build there.
All eyes are going to be on that, as well as you said, the mortgage rates. But how should home buyers approach financing their home as they're entering the market, especially for first-time home buyers?
People need to understand that it's not just about the rate, it's about that monthly payment. And there's different ways to lower your monthly payment. You can buy points and buy down that loan. You talk about home builders. One of the incentives that we're using with a lot of our developers, both in New York, South Florida, the Carolinas, is doing point buy downs, so rate buy downs for new purchasers that come in who say, listen, I'm fine with the price, but I can't afford that monthly payment. We say, great, we'll buy down the price. It's all about the net effective price for the developer anyway. And now you're going to have a lower monthly payment as you go forward. You can live in the home. You won't have to move in 5 years. And so people need to understand, how do they live in that monthly payment? And every 100 basis points, 500 basis points in rate movement isn't as big of a deal in the monthly payment as people think. The media blows it up, but it's not as big of a deal, which is why there's so much demand for housing that just doesn't exist, and we need to create more supply.
I always like to say that you're dating the interest rate but buying the property, because you could always refinance at any time, right?
You can always refinance. Yep, there are refinance costs, but because rates are higher now than they've been over the last 15 years, a lot of banks now are kind of locking you in and saying, listen, if rates go down, we'll do a free refi. Work with us, work with Wells, work with JP Morgan Chase, and there's different ways to structure those deals, especially with homeowners too. Remember, there's also tax buy downs you can do. There's furniture that you can have included in a deal, and then you think about what it would cost to furnish that new home. That affects your monthly payment as well, as you think about your all-in cash outlay.
But also you can negotiate concessions, especially when dealing with new development. I think in New York it's something around 20% that you can negotiate into your deal, and so that could go toward your lawyer closing cost fees. All of that adds up.
You need to tell me where I can get 20% off anything in New York City right now. That sounds pretty incredible. None of my developers are doing 20% off right now, but there are concessions that you can do. If you're buying a new construction in New York City, you're factoring in somewhere between 4 and 7% in terms of closing costs, taxes. The more expensive the purchase is, that luxury tax goes from 1% to nearly 4%, right? So you do have a lot of taxes and concessions that you can play with. You have designer credits. We're doing a $20 million deal right now on the Upper West Side. And in order to bridge that gap, the seller is giving a designer credit, right? So it's not a tax concession, but it is a concession, and it helps bridge that gap for that purchaser. I mean, we've had at our firm probably the fastest start to any market I've ever been in at the beginning of any year. We crossed $560 million in transactions yesterday for the first 14 days of 2025. So I think home builders are going to be really excited at 10 a.m. You're going to see that optimism that's out there. I think America's open for business, but even on the $400,000 transactions, we're people saying, you know what, I can't wait anymore. Rates are what they are, prices are what they are. I can predict the future. I have somewhat of a stronger sense of consumer confidence. I need to move. I have a baby who sleeps on a cot. We've got to move. We've got to make decisions. And you're seeing sellers do that too, even though most sellers don't want to sell. Everyone is going to actually get back into the market this year.